This is Justin Scoop for SPX on Wednesday, September 17th, 2025. So we did get the announcement for the rate cut, and it had a reaction in the market. So that announcement came through right about 1 p.m. There's a little bit of movement bullish right for that. So in the 3 minute candle just before 1 p.m., it actually started to kind of break out, and then it really got moving at one, and then it pushed even higher the next 3 minute candle. And that, what I was noticing is the RSI was really high. So I changed my chart up a little bit to show the RSI. The RSI was really high. It was at 92, over 92. And then once it hit there, then you got a strong sell off. It chopped around a little bit. Looked like, okay, maybe it took out the low. Now it's going to bounce. So it bounced a little bit. This RSI almost hit the well, no, it's still kind of in the middle of the range. The next time the RSI got low was way down here after it sold off quite a bit more. And ignore this dotted line. Somehow that's off track from the midline over here. But isn't it interesting? We've got kind of a highway candle sitting right on that midline. So kind of a decision time. So the other thing I was noticing, just let me zoom in on this. So the next thing I was noticing here is this. So this sell off way down here came back up. That looks like a really nice inverted head and shoulders. So I'm like, is this thing going to break out and go to a new all-time high and give us yet another bullish candle? And it didn't. It chopped, put in maybe a second shoulder. We'll see if it gets above this and opens higher tomorrow, and maybe this whole thing will be an inverted head and shoulders. Could very well be. Uh, we'll have to wait and see. So let me zoom back out. So this was a really good day to just stick with the quarters, the 0, 25, 50, 75 on the option. So I've got a couple of those ready just to take a look. So this is the 66.25 call that expired today and the 6,500 put. Now the puts obviously further out of the money, but generally that happens. Puts are more expensive, have a little more premium baked in. And so when this was way up here and the RSI was spiking, that's when this option pulled down past $1, which is a great place to get into it and see what you can do. Just buying at a low risk and seeing, okay, hey, is that going to move? So if we look a little closer, so I didn't have this prepped, but we're going to look a little closer and see the next quarter closer. So that the 65.25, did that have the same kind of a movement? This one didn't pull down to $1. At that point, didn't pull down to the dollar. That's the simplest thing to look at is, did the next 25, the 0, 25, 50, 75, to the next quarter option, that's what I'm gonna coin that as the quarter option. Did the next one uh, pull down to $1? And when it didn't, you can very quickly then go look at the next one rather than looking at the 65.20 and the 65.15 and the 65.10 and the 65.05 and then get to the 6,500. Instead, just jump to the 6,500, set up the trade, and set the limit price to buy at $1. And if it fills, great. You could even have the option set or the trade set up on the 65.25. And if that comes down to $1, great. Then you're filled on both of them and hopefully it bounces, right? But you can actually get out of that relatively quickly. If it doesn't, if it keeps moving up, generally there's some bouncing, there's some movements on these today. As you can see here, there was actually one, two, possibly a third. The low here was one, possibly three. Okay, I'm going to call it four times that you could have bought just out of the blue, nothing signal it, just bought at $1 and rode that up. So let's do this. Can I put just, oh, I can put just this. No, I'm going to leave it like this because you can see what's actually happening where I hold the cursor. So this pushed up really high. The best part of this one is the RSI. The RSI spiked really high, got way up there. It had gotten into the red area. So I'm looking at this portion. RSI got into the red area over here and then reverse. RSI got into the red here, pulled back. RSI got way up here, much bigger pullback, and then it didn't get into sold off till way down here. And it only done that once earlier today at this point where it was starting to break down. and then chopped. So these are just really like the RSI is really informative in this case. So I was watching this quite a bit today, just waiting for. I was down looking at 1 minute for some of the time, just looking to see, okay, is this going to actually give me a reversal signal? Let me wait for this to get really high, kind of spike, and just because today with the volatility, this was really a really good indicator. It may not be a great indicator every day. Definitely go back and look at the previous Fed announcement, look at how it works each day. I'm just saying what I observed today in hindsight, obviously, seeing, well, I was trading this live, but I mean, for your own understanding, look at how the RSI is moving, especially when we get to some of these extreme levels. And it's the way to kind of consider it in this case is we've kind of pushed to an extreme. Should we get a pullback? Can it pull back? Yes, it can totally pull back. Should it? Depends on how strong things are. Um, is it at a point that it's a low risk to buy the put when we're way up here? Yeah, it's really low risk. So in that sense, it's a really good time to set up a trade for a reversal. Same thing on the bullish side. So when it's way down here and it's been selling off, you get a bunch of these sell-off candles in a row, and the RSI spikes down, it's like, okay, well, and it even sold down a little bit further this candle as the RSI started moving back up. But like as this candle opened, it was actually a bear candle. It gapped down a little bit, it was trading down. Same thing for the call. So this is the 66.25 call. The low here is zero point 0.9. The low on the next candle, that one was zero point 0.9. This one was 0.95. Again, you can just have the trade set up. Okay, let me look at the 6600 call and see where was the price on that one as we're selling off. So this one, the low, zoom in on here. That's too far zoomed in. Okay. So the low over here was about 3. So we got down to 274, 2.6. So you could still have a trade set up to buy at $1 over here and then cancel it when the 66.25 call fills. And this one actually would have filled at $1 if you had it set up ahead of time as we're pulling back. Now you could also have gone further away and say, okay, let's set up the 66.50. Again, this is just to help to not spend time looking at each of the other options. So this one, now if you think, oh, we'll take a break here, we're not going to sell off anymore. Well, no, that wouldn't have filled at $1. As this is selling off, let's see, this candle. So I'm looking in the top right screen for where the option was. This was a really nice hammer. I liked that hammer coming in. And then it got taken out with this candle and then it bounced. So I'm guessing a lot of people were buying on this candle. And on this candle, it actually was already below $1. So it is selling off. It's selling off sharply. It's like, okay, it didn't get down to $1 on the 66.25 call until this candle. So yeah, this could have been a setup that you got in at $1. And then even as it started to rally, it barely moved above $1. Like the high here was 1.5, the high here was 1.5 again. So it's like, okay, just get out of that one because that one didn't really hold the dollar value or really didn't get going above $1. It got right back into the dollar range. And so maybe you just close that as $100 risk. That's lost. You had some opportunities to get out as it just was chopping through here, but after a bigger move up, okay, the call, there's 1, 2, 3, 4, 5 bull candles in a row. At this point, if you're not getting a much larger premium out of that option that you bought, it's not going to get there. Cut your losses or get out, eke out a small gain here or break even or something on that move up because that's a significant move up. And like I drew the inverted head and shoulders here, it's back up to kind of this neckline. Uh, how strong does the market have to be to keep pushing this option that much further? This option needs to get much closer to at the money. Well, the one that we're really close to is 66.25. We actually were in the money. No, we were at the money. No, slightly out of the money. The high here is 66.24.39. So we're almost at 66.25. That's another way to look at this. It's like, okay, could we get there again? What's this option? What's going to happen with this one? When it was at the money, this one, I'm just going to get up in here. So this cost over $20. 22 is the high. All right. So when that happened, it's like, okay, could we get there again? Or could we move in that direction, significantly in that direction again? Well, yeah, we sold off quite a bit. The 6,600 we could get to, but that didn't come down to a dollar. So this is the next best one to get in. And even if you, so here's the other way to think about it. If you buy this at a dollar and you buy the 66.50 at a dollar, and the 66.50 you're able to get out break even, but this one you're able to get out at say five, you've covered the cost of that trade, of both trades. You may have lost or gotten out for break even on the other one. Okay, that's a scratch. This one you got in for a dollar, you're selling for five. That's $400 per contract. So there and this that was getting out on the one, two, three, four, fifth bull candle, and maybe even a little bit above five. This made it up to 6.2 on this candle. Not that you're going to sell the high, but even if you got it in at one and sold it three or sold it four, like that's a good move for this kind of day. Just the options are so unpredictable and they move so significantly. I was just looking to do a couple scalps on some options today, and some worked out, some did not. This one is one that you could have actually bought again at a dollar over here and actually moved up, got up to a high of 1.85, and that was it. It could have kept going. There were some really nice hammers in here, but at this point of the day, it was just chopping sideways, trapping everybody. I lost some premium on some options over here, and um, yeah, it's the trades just didn't work. So really big day, really big moves. The options I remember saying yesterday, like you might be paying $3 for an option that's 50 points out of the money. They were way more expensive than that. They were $3. Like these are, this came down to $3 after the announcement. So in this time of day, the options were less expensive, 50 points away. But over here, they were massively expensive just because the premium was baked in and the market makers weren't just going to let you make a bunch on a bigger move. We still have the setups, we still have the opportunity to do that. And if this is too much for you, go trade SPX or SPY because that has smaller moves. But you could still, be closer to an option that's at the money or a dollar or two out of the money, but you're not going to get the significant moves like this. Actually, take a look at SPY and you'll actually see some similar moves. Um, you would probably also be in more contracts than just like the one or, you know, the risking $100. There's ways to risk $100 with those options on SPY, but you're not going to get the same amount of return, things like that. So anyway, we've got a nice back to the daily here. We've got a really big day. Futures are up right now. We almost made an all-time high today also. We stopped alternating, so we were alternating bear bull, bear bull, bear bull, and so that went on for 8 days over here, and then this went on for 7 days over here. So the next time we start alternating, I'm going to be looking for it to go 7 or 8 days. Um, it's just really interesting that that played out so many times. Each time it alternated, we got a significant enough move that at some point during the day you could have bought it or sold it and or bought a call or bought a put on the particular day and make some money on it. So that's worth looking at to see how is this setting up, how is this moving. Not that it's going to happen the next day, but if it gets into these rhythms, um, it's worth kind of checking out. It did 4 days right here, not five, but four. I can't highlight just 4 days. It won't let me. So 4 days in a row. So bear, bull on that one. Coming down and went bull, bear, bull, bear. Um, so it looks like we're doing some alternating. And then this time, after we made that last one candle for alternating, we kind of went sideways for a couple days here, and then it started to pull back. Actually, I would include this. So probably 4 days of sideways after that bigger candle up, and like these 4 days sideways. Um, we we've kind of been alternating, but then we kind of went sideways for these 3 days. Obviously, today was a much bigger range, but we've rested. We've absolutely rested. We've pulled back enough that we pulled back into some of the long-term moving averages here, and then it's a question of where do we go from here? Futures are up. If we make another, if we gap up and make another new all-time high, Um, if we open there, we will be trapping all of the bears from yesterday and today. That's significant. That could actually be a really big catalyst to go maybe 6,700 in the next few days. I don't know how big the bull candles are going to be. This one, because it had had a sell off over here, there was selling that came in. These bull candles were pretty big. This time around, these bull candles are not as big. The middle one kind of is there. Um, the other ones just don't seem as big as Pecker. The range is smaller. And so I don't know if that is just a matter of being this much higher. I don't know if that's a matter of less buyers or not sure what that means yet. It really will have to hindsight's 2020. We're gonna have to wait and see how things actually move around. But I would not be surprised if we just continue to rally. I think the market had, even though today was a really big choppy day after the announcement, I think the market had priced that in. Um, and it was anticipated that the Fed was going to cut rates. Um, we'll see if any of that confidence gets sucked out. Premium's going to dry up some options. If we start having a bigger move up or down, there shouldn't be as much premium baked in by the market makers tomorrow or the next day, just like it was today. So if we do have a smaller range day and a bull candle, it shouldn't be as difficult today to get an option closer to, excuse me, to at the money or in the money. Um, so let's just say it. So to tomorrow, potentially be looking for the 66.50 call. I don't know what the price is. I haven't gone that far to look at options to see. I'm just saying that if we were to gap up, there's a potential that we could run at some point run towards that. I'm not even saying get in the money. Make your own decisions on what the trade's going to be. You're clicking the mouse, not me. I'm just saying like these are things I'll be looking for. And then if we were to gap up and sell some more, like if today is just a fluke and we have a bear candle, and then tomorrow is a bear candle, like as if it was supposed to alternate. Because at one point I was looking, I think I was trying to see what did the candle look like before that selling happened, the couple minutes after 1 o'clock, or the couple 3 minute candles after 1 o'clock. And I put in a 275 minute candle because I wanted to see, um, was it 275? Yeah, there were 2 hours left in the day at 1 o'clock. So I want to see a few more minutes of it. So I did a 2 hour and 75 minute candle. Actually, that's going to be easier for me to pull up in TradingView. Give me just a sec. I can pull that up and show what I was seeing if I can get the chart ready. Okay, 275. All right, so here is, I'm just going to pull up this on TradingView. Okay, so here is a TradingView chart, SPX, and I put in a 275 minute candle, and it was strongly bullish at that point. And then it immediately was selling off because this was, I mean, if I did 276 minutes, it was selling off right about that point. That matches up with when we were on the 3 minute here. So this was through the 1:05 p.m. time. So at 1:06, this next candle started selling. So that's why I'm looking at. I wanted to capture, okay, through this high, what did it look like on the day? And so the 275 minute candle showed me that candle. So we'd actually put in a lower wick, nice hammer up at what's been a resistance here, but it was a really strong day. So it was bullish looking. And then we had everything with the announcement to finish the day and had a really large wick down and then bought back up significantly. So this is what I'm saying too. Like if we gap up, anybody who bought through here is going to be profitable. They may be taking their profits already. This is for sure a rest all through here. Like the last 1, 2, 3, 4, 5, 6 candles that are 275 minute candles. I know it's an odd number. It's a little bit past was it 4? It's a little bit past 4.5 hours because it's from 8:30 a.m. to 1 p.m. plus 5 more minutes. Um, So it's 4 hours and 35 minutes on this candle. So that doesn't break down evenly in the day. So this one starts at 8:30. This one starts at 1:05 p.m. So this one, you know, the last the last 115 minutes of the day. It's really a strange way to look at it. I know. All I was trying to do is get what did the day look like through 1:05 p.m. That's basically what this is. If I go back to looking at this as a daily chart, obviously we're back to these not alternating. You know, it's just the same thing here. Actually, let me go back into this is easier for me to look at. So you can see the RSI, what it was doing here. It's set up the same RSI with a 9. The high here, I don't have the range set on this the same way. But if I drill down into a 1 minute, this was having some interesting things, interesting peaks. So we peak here, and then it pulled back some, and then it didn't get as high. So that's some divergence. That was actually a nice signal that, okay, we've got bearish divergence here on a 1 minute, and then it started to sell off once it got to that peak. But you don't know that that's a peak until it's broken down. Until this candle comes in, you don't know that's a peak. But sometimes I like looking at these candles just to see, like, okay, do I get any indications sooner? Something that I can be like, okay, I see that big bear candle right there. If we don't recover from that, let's do some selling off. Or could we get back into this area and retest, which this one almost did. And then from here, that was this peak, and that kind of matched this one and this one. And because this one is a little bit lower at 93.06 than this one at 97.42, this is that's not divergence anymore, but it's a lower RSI. You know, again, just look at RSI, see, understand how it moves. But what I was seeing, you know, zoom out, what I was seeing, what I'm trying to make the point on, and I know I'm talking a lot about this, but much clearer on how things are looking today. I'm seeing these waves come through here. Okay. See how wavy that is? And then I'm seeing similar highs and lows and highs, and this is a choppy low, and then high and low and high and low and then chop. So this high eventually gets to that high. This low here actually was somewhat of a divergence. So this was going lower, but this was going higher. It was going higher. So that's a divergence. This high matched up pretty closely with this high. This high matched up pretty closely with this high. It just gives you some cleaner view. Like if you've got alerts on the RSI, I know there's a way to do that in TradingView. I'm not sure about Thinkorswim, but if you're watching on a 1 minute, you start to see, hey, we've got some things shaping up on these highs. Let's look for a reversal. Obviously, this one didn't really work because wow, that's a lot of messy drawing. Let me do it a different way. Let me see if I can draw it differently. I need not that. Where is the drawing? That's not. There we go. I want the box. And I'm going to switch to blue. Okay, so that didn't really match up as cleanly. All right, this matched up pretty nicely. This matched up pretty nicely. Where the RSI got kind of high, and then we rolled over. RSI got kind of high, then we rolled over. Okay, this one, we just didn't roll over as far. We didn't make, these first two we got on the low end of the RSI. This one we didn't. We actually kind of came down to this low of the purple area and then got back up. So kind of like this matched up, but then again we didn't sell down. So later in the day it wasn't working as well. So this I don't want the box now. Let's go back to the drawing. So this here didn't sell off as strongly. You know, that didn't sell off as strongly. This didn't sell off as strongly as earlier. And then the same thing. Let's use green. So here, let's use a green box. So obviously this is all after the fact. This is all hindsight, but you can kind of start to see the framework. Hey, the RSI is low. There's a hammer. Let's buy. And we rallied some. Over here, this was kind of like a false low. Like this kept selling off. So even though this RSI got low, was down in here, this is why it's important to do some absolute zeros when, okay, we continue to sell. And then when we were right here, we actually did not get back down to the lowest of the RSIs, but we were, like I said, we were having divergence. So there's different things to look for on the RSI and how that's moving. So I would say the only time it worked to go bullish was really this first one in green here. This next one, it didn't. Can I put that back in? That didn't really work as well. Um, but for going bearish, these first two were great. The first two blue areas, blue boxes were great. This next one here, this was kind of the signal that's like, okay, this looks, something's going on here. And I'm gonna, let's see. You know what? I want to grab this as a picture. I think I'll use this for the, um, I have to say I'm looking at the 1 minute now. I think I'm going to use this for um, the thumbnail for today's video because this is just kind of cool, like looking at RSI in a unique way. Maybe not a unique way, just all the way down to the 1 minute. All right, so I'm going to save that. When I'm done with this recording, I was going to delete all this and just draw on here again the inverted head and shoulders. And let me see if I can do that with something that's going to stand out on this one. I'm going to do this thicker. There we go. This should work. Okay. So that's much easier to see. Gosh. So what I'm seeing here is really an inverted head and shoulders. You could do a straight, almost a straight neckline here, which is phenomenal. And then we're right now with futures, we're above this. So it's functioning, it's working as an inverted head and shoulders. I just think that's really cool. We'll see what that can do for us for trades the rest of the week. But yeah, that's a much cleaner picture. I'm not sure how the RSI would play out in traditional inverted head and shoulders. This is much more lopsided. Obviously, this shape over here is more like a sharp, a sloped decline, and then a really steep climb. So anyway, back to this. Same thing here. So I just drilled down to the 1 minute, and I hope this helps. I'm trying to go back. There we go. Hope this helps. This is Justin. Thanks.